Welcome to Factful Finance, where we break down the complexities of personal finance to help you make smarter decisions with your money. Let me start with a surprising fact. Did you know that in the last 12 months, inflation has risen by more than 4% in the US alone? This means that if your salary hasn't increased at the same rate, the purchasing power of your money has decreased. So, how can you protect yourself from inflation, and what exactly is driving it? Let's dive into understanding inflation, its causes, effects, and what you can do to safeguard your financial future. Now, before we get started, a quick disclaimer. The content shared here is for educational purposes only. For personalized financial advice, be sure to consult a professional. Inflation refers to the general rise in prices of goods and services over time, leading to a decrease in the purchasing power of your money. But why does this happen? There are three main causes. 1. Demand pull inflation. This occurs when demand for goods and services exceeds their supply. When too many people want to buy something but there isn't enough of it to go around, prices rise. Think of it like a popular concert ticket. When demand outpaces the supply, the price goes up. 2. Cost push inflation. This happens when the cost of production rises, leading businesses to pass those costs on to consumers in the form of higher prices. For instance, if oil prices go up, transportation costs increase, and that affects the price of goods across industries. 3. Built-in inflation. This is also known as wage price inflation. It's a cycle where workers demand higher wages to keep up with rising living costs, and businesses then raise their prices to cover the cost of paying those higher wages, continuing the inflationary spiral. So what are the effects of inflation? The most obvious one is that it makes everything more expensive. A dollar simply doesn't go as far as it used to. This can erode your savings and make it harder to maintain your standard of living. It's particularly tough for those on fixed incomes, such as retirees, who may find their purchasing power dwindling over time. But inflation isn't always a bad thing. In moderation, it can signal a growing economy as people spend more and businesses grow to meet demand. However, when inflation becomes too high, often above 3% annually, it can be a cause for concern, leading to higher interest rates, which can slow down consumer spending and borrowing. So what can you do about it? Here are 3 actionable steps. 1. Invest in assets that outpace inflation. One of the best ways to hedge against inflation is to invest in assets that tend to increase in value over time, like stocks, real estate, or commodities like gold. Historically, the stock market has outpaced inflation, providing long-term growth for investors. 2. Diversify your portfolio. It's essential to have a diversified investment portfolio to reduce the risk of losing money when inflation hits. Spread your investments across different asset classes, including stocks, bonds, and real estate, so if one market is struggling, others can buffer the effects. 3. Consider inflation-protected securities. If you're looking for a more direct way to fight inflation, Treasury inflation-protected securities (TIPS) are designed to increase in value with inflation. These bonds are backed by the US government and adjust with inflation, giving you a reliable way to keep pace with rising prices. Let me tell you about Sarah. Last year, Sarah noticed her grocery bill going up, and her savings didn't seem to stretch as far as they used to. She took a proactive step and invested in a diversified portfolio with a mix of stocks and real estate. Over the course of the year, she earned a return of 7%, which helped her keep up with inflation and even grow her wealth. Inflation may feel out of your control, but there are tangible steps you can take to fight back. Protecting your financial future doesn't require major sacrifices. It's about making informed decisions today that can pay off in the future. Now I want to hear from you. What steps are you taking to protect your money from inflation? Drop a comment below and share your thoughts. Thank you for joining us here at Factful Finance. If you found this video helpful, consider liking and subscribing so you don't miss out on more tips that can help you reach your financial goals. And if you like what we do, why not click the bell so you'll always be in the loop on new insights? We think you'll find the video on screen next interesting. It may just give you the financial edge you're looking for. Stay informed, stay proactive, and see you in the next video.